Hi, welcome to the Market Alert for Friday, the 26th of March 2021. So stocks dump and pump, dollar gains amid Bitcoin and bond pain. So thanks to yet another big short squeeze that began shortly ahead of the EU close. And we'll see that when we look at the German DAX. However, during the session yesterday, traders were jolted by a mini flash crash in Treasury futures. Things are breaking again. As I've said for the last 2 weeks, something isn't right, something is broken behind the scenes, and I think it's more to do with the yields than anything else. And as also pointed out yesterday, central banks are going to need a bigger boat, and of course this is having taken that famous line from the film Jaws, when they first spotted the shark and then realized the boat was too small. And this is the same for the Fed, and obviously it's being used as an analogy to point out that what they've done for the last 13 years is just making things worse, and it's going to make it even far worse going forward. And it's just a case of keep printing or revaluing. It's as simple as that. And as it says here, with the script writer's pen, so they'll just keep stimulus followed by stimulus followed by stimulus until they can no longer do it. And of course, as mentioned 2 days ago, that Biden is looking to print another $3 trillion for infrastructure spending as well. So the yields yesterday sort of sideways, I suppose. We have a quick look at the last 5 days. There's definitely something going on in this market, because once we got to 175, I would have expected that to have had a run up to the 2% level, but you can see there's some sort of control going on this week, as the central bankers have been out, obviously pumping the dollar with their rhetoric and trying to reassure the markets that everything is fine. They've got it all under control, which we all know is BS. But that's the central bankers for you, the clowns, utter clowns, academic clowns is what they are, and just trying all sorts of theories to continue the illusion. Meanwhile, for news today, we've got retail sales from the UK. These are forecast to be higher. We've also got German info business climate forecast to be higher. And you'd expect this as we come out of the lockdowns. Well, I say come out, I think most are going back in Europe. Certainly Paris and 17 other regions, and Germany have also cancelled Easter. But anyway, that aside, we've got the Euro Summit continuing today, and we're up to day 2 of this. So let's have a look at the markets, see what has been happening over the last 24 hours. We'll start off with the Dow, and we can see the pump and dump here. You've got the dump to start with, down to the 38% and the 20-bar moving average. Which we'll see here, and then prices were driven back to the upside. And what I've done here is draw in the fib retracements from the high to this low, and this is where you can expect resistance as prices start to move to the upside. You can see at the moment prices are approaching the 62% retracement for the Dow. Now on the implied front, very interesting here as well, because we've gone from 1716 on Wednesday to 1567, making a new low, taking out that 1603. So we've got a new low in implied volatility. If the underlying market, i.e. the Dow, now can continue to move to the upside through these fib retracements, we will see the implied moving back down to the sort of lows that we had over here before we had the major sell-off when the virus arrived in February of last year. But we'll have to wait and see if prices can actually move to the upside and what is actually going to move them to the upside. But it's Friday, and that's usually an up day for the market. It likes to finish on a high for the week, so it'll be interesting to see. The German DAX also showing a similar picture, except the retracement in the Dow, where we've used the dates from here to here in the Dow, in the DAX, we didn't really get that same sort of pullback, because we've got 38% of that move is way down here. So what we did is draw from here to the recent high, and this gave us the 89%, and also ties in with the 20-bar moving average. And you can see prices from the volume yesterday moving back to the upside. Prices currently trading at the 78% retracement. 89 will be an issue because this ties in with an R1. So let's have a look at this. So I'll tell you what, I'll just cover the overnight first, and then squeeze this down so we can see where we are. So we'll just drag this over to the left. We've got prices opening and trading at the previous day's high. This was a bit of resistance. You can see the selling pressure in this bar here, massive volume as the market opened overnight, forcing the market back down to the 200 MA, back to the high, so stuck in a range between the high and the 200 MA, and then breaking away from this earlier this morning. Here you can see the R1, which is at 4787, which is just before, if I remember rightly, we've got that's the Dow. Would help if I actually just clicked on here. Before we've got 763 here, and we're at 787. So yeah, so we'll be just through the 89% retracement if we get to the R1 there. So that on the upside you've got the R1, and then on the downside, of course, you need to see prices remain above the high, the 200 MA, this BRN, and the previous day's close. Any sign of a move below these areas will take you down to this BRN first, and then the DP, where the support would be likely to be found, because it'd be a big reversal to go back to yesterday's low. It'd be a huge bar. Not impossible. I mean, anything can happen, but it's, you know, just by looking at this in this way, then, you know, I would say that your worst case scenario on the downside would be the DP level, but the high and the close are going to be crucial to the DAX for today. Well, certainly for the futures market and the first part of the session. Now, I forgot to hit the record button yesterday, so let's have just a quick overview of what happened. We can see that in the futures market, prices trading above the DP and the 200 MA, but failing to hold, or failing to make any progress, and then coming back and holding until the cash market opened. Then we saw selling come straight into the market. They tried to buy back, hit with further selling down to the low. We know from previous market alerts and the way they move the markets, if they can get to the low, they will buy back the low, and that's precisely what they did, and they brought back the market. We then had a signal. This saw prices moving up to the BRN, prices trading sideways. Unfortunately for me, I got out too soon, as we had this potential weakness, and then prices started to reverse, and then bounced on off the 200 MA, and then back up to the BRN. Prices then became really sideways, as you can see there in this range, managing to move up to 89% of this high to here, and then just becoming really quiet. And then as the bond market futures opened, as we saw here, you can see this mini crash. Bonds open at 130, and this resulted in prices moving to the downside sharply. Afternoon session, the market was brought back. And note this area and time as well, because something very interesting happened in the silver market, which I'll show you in just a moment. So the market was quiet as to start with in the afternoon. I thought it was going to be a bit of a damp squib. We had a buy signal. The market moved to the previous day's low, which had been taken out at this point, of course, with that sell-off in the bond market. And of course, this needed to be taken out if it was to move back to the upside, but it took a moment or two. We then had a sell signal here at the 200 MA. Prices then finding support rather quickly before moving to the upside, but just getting down past the scalp there before turning around. And then you can see early evening, the market continued to move until the Dow closed. Then we saw some profit taking here, and then we've got the current picture, which we've already been through, of where prices are currently trading. Now, just to finish off with the silver market, as you know, earlier this week I was looking to see if the market would get down to $24, and all was going well. If we look at the smaller time frame, you can see that JP Morgan were doing the best to bring the market down. It was also the option expiration for the March options, and as soon as that got to the expiry into the session, the market put in a reversal. Now, I don't know whether they use the Treasury sell-off, that flash crash, to do this, but it was quite amazing to watch this coming back and actually not failing to turn around and sell off. And as you can see, overnight prices are currently holding in this market, which is a shame, because I had an order into there, still in there at the moment. I've got a buy limit at 23.97, just in case the market spiked down like it spiked down below the 200 MA in the daily chart, which you can see there. But yeah, it didn't get filled, so shame really. But price is now starting to move back towards the upside. I'm going to have a look at see if I can find a way of getting into this. I'll probably use an intraday chart in order to do this. Look at something like a 30 minutes, see if there's some major buying around. But on the upside, from here to here, any sort of retracement back now, we need to see where there could be some resistance, which I can use. So from these 2 points, let me just add in 38 into this as well, and a 50%. Click apply, and then we'll just save this. So let's just do this again. So from this high to this low, just to get an idea of where there'll be resistance on the way back, and you can see we're already at 38%. The key really is going to be in this area. The 89 and 78 is always the area of grief for a market. It starts at 62 really, but if you can get through 62, then the 78 and 89 really does become a bit of a major resistance or support, depending on which way it's drawn. And again, also at this area, you'd expect to see some sort of resistance as well, because this is where the market sold off over the last week, started to move lower. But it's interesting, this market has pulled back nearly $6 during the last month, so or last 6 weeks. Yeah, February the 2nd, wasn't it, when we had this spike to the upside? February the 1st, that's it. And then the 2nd, they came in and slammed the market, which is all documented, which I said they would do, because that's what the banks do. Once the banks get long, this chart will look like a Bitcoin or crypto chart that have been vertical. But until the banks get long, then we've got to just put up with this sort of silliness and manipulation that's been going on for years. Talking of which, I noticed on Zero Hedge yesterday as well, a trader who had been caught manipulating the oil price as well, who's currently in court. Goes on all the time, and I wouldn't imagine that it's actually authorised and sanctioned by the CTFC and the bodies, because they don't seem to do anything about it, even when evidence is submitted to the contrary. Anyway, that will do it for this one. And we're at the weekend. The clocks go forward this weekend, so we're back to normal next week with regards to the Dow. So with that, as ever, thanks for watching. See you in the next.